Hi, this is Carolyn Larsen-Wieber, and this is my video. The title of this video is the 0% capital gain rate and who can get it. Yeah, that's right. I said 0% rate. Who wants to get that? Raise their hand. Yeah, can you believe it? There is a 0% rate. This is a short 5-minute video, and make sure you go ahead and listen to the end because I'm going to talk about a real life client example, and the fact patterns may be such that you fit right in because it's a great example. So what are the 3 things that I'm going to go over in this video are what the types of income are and what you need to have, who are the people that are going to qualify for this strategy, and what is the income target that we're going to look at that are going to benefit from this strategy. So let's go ahead and get started. Let's start talking about the different types of income that we talk about in the tax world. There's basically 2 types of income that I'm talking about. I'm talking about ordinary income. And ordinary income is Social Security, salary, wages, pensions, and annuities. The second type of income type is capital gains, and that's capital gains comes from the sale of stocks, sale of bonds, capital gain dividends, and REIT dividends. So there are different brackets in the ordinary income tax, and those brackets, and I'm going to read them to you. There's 7 brackets. There's 10% bracket, 12, 22, 24, 32, 35, and the top ordinary bracket is 37%. Did you know there's also different rates and brackets for capital gains? So depending on where you are in the ordinary brackets is going to depend on where you are in the capital gains brackets. So the capital gain brackets are 0%, 10%, 15%, and 20%. So for example, if you're in the 37% bracket in ordinary, you're going to be in the highest 20% bracket for capital gains. Okay, so what is the big deal here? Well, the big deal with this particular strategy is it's kind of like a puzzle. And in the tax world, what you want to do is you want to maximize the ordinary types of income, and you want to marry those types of income up with the ordinary types of deductions, which are your itemized deductions, state and local taxes, charity, or the standard deduction, whichever you happen to fall into. So the beautiful part is when we're planning and we're managing this, we want to make sure that we don't quote unquote waste your itemized or your standard deduction. I have had clients who actually, once I look at the tax return, maybe they did their own tax return or a CPA who really didn't have their head on straight, didn't recommend that they didn't take enough income to use up their standard or itemized deductions. That's what we call as a wasted deduction. Okay, so we talked about the what types of income and the brackets and what we're trying to do. So who is a person that's going to qualify for this? Well, it's going to be a person that has an investment account that has stocks or bonds or securities that have some gain inherent in them, unrealized gain. So you want to have that first. The second thing you do want to have is you want to have the other ordinary types of income so that we can, use up the ordinary deductions. So you want to have wages or salary or pension or Social Security. And then the third thing is we want to have, we want to be able to match the income with the deductions. And then after that, we look at the other types of income, the capital gains, capital gain dividends, REIT dividends, and those types. And we identify, you know, where all the income is coming from. The third thing we want to look at is, are you going to fall into the targeted rate bracket in order to take advantage of this strategy? Well, how you get into it is, if you're a single taxpayer and you're earning between 40 or 50,000, but no more than 50, then we can use this strategy on you. If you're a married couple filing joint and your income is anywhere between 80 or 104, but not more, you know, more than that, 110, that's where we can take advantage of this strategy. So let me go ahead and talk to you about a client of mine where each and every year we would do this strategy. So round about June 15th, first of all, I knew what his cash flow was. His cash flow was between 100 and 120. And so he also had tax exempt income, which is a third type of income. We didn't talk about that, but the first 20,000 of his cash flow he used with tax exempt income. Then the remaining of that, what he would do in the middle of June, he would just give me a sample of, okay, this is what I've taken so far, my wife's pension. This is what I've taken from my IRA. I talked to my investment advisor and he said, year to date, I have X capital gains. What do I do next? So that's when I would take a look at our target. I would look at that and I would reverse engineer, and then I would see where the gaps were. And I would make a recommendation of, okay, Mr. Client, you need to take this much from your IRA for the rest of the year, and we need to talk to your investment advisor, and you know, this is the amount of capital gain that we want to realize, but no more. And then what we would do at the end of the year, right before, you know, before the year closed, because if for any reason, you know, for whatever reason, the capital gains got a little bit out of hand, there would be time enough for us to do some selling. Or even if you took more out of the IRA, there's a 60-day rollover, so you actually can put money back. So that was a great example of somebody earning 120,000 and still getting 0% capital gains on the sale of their securities. And that's actually a great thing, because when you're selling your securities at zero tax bracket, you're actually getting your step up in those equities, and that's a good thing. One of the good things that we do, because you can rebalance and you can step up your securities, and the next time, you know, you won't have any more gain in them, depending. So I hope this video has been helpful. Please share this with somebody who you think can really benefit from it. I so enjoy getting referrals from my clients. They are absolute best, because you've qualified them. They're people just like you, and it really does fill up my heart that my clients think of me to refer for other clients to their friends and their family. So anyway, I hope this has been helpful. We talked about the 0% capital gain rate, what types of rates there are, what the brackets are, what type of income buckets that you need to have, and what the target levels are. So I hope this has been helpful, and I look forward to the next video.